Good afternoon, everybody, and welcome to our webinar this afternoon, State Task Risks in a Remote Telecommute World. Your presenters today are Karen Poist and Kimberly Tarnakow. Hopefully I got that right, Kim. And we do have some guest presenters with us today. We have Valerie Higgins and Mindy Toole. All of our lovely ladies are up on the webcam today, which you can see by customizing your GoToWebinar screen today by going to the Everyone drop down and selecting if you want to see the webcam or the presentation or both. We have some different audio options today. We have the computer audio and the dial-in option. If you are having trouble with either one of those, just feel free to toggle between the two. If you have any questions, please drop them in the questions panel of the GoToWebinar control pane. We will not be monitoring the chat box during this time. The handout is going to be available for download in the handout section of the GoToWebinar panel. And we will have 3 polls throughout the presentation today if you need that trustee 1 CPE credit. And in addition to answering all 3 polls today, please complete the survey at the end of the presentation to just let us know that you need that credit. And without further ado, I'm going to turn it over to Karen.
Well, good afternoon, everyone. Thank you so much for joining us this afternoon. I know this has been a taunting area lately, and it's caused a lot of aggravation for most of you. But we're going to go ahead and jump right in first thing. And I thought we'd start out with a few things in regards to definitions. You hear a lot of these terms interchangeably: teleworking, telecommuting, remote workforce, etc. We thought we'd put out some definitions here for you, first of all, so we can all start on the same page and we all kind of have an idea of what we're talking about. This is nothing new. I think we've dealt with mobile workforce in the past, where you have employees traveling to other states to do work. But right now we're seeing an onslaught of this, and it's pulling more and more. So in regards to teleworking and telecommuting, that's more of a temporary situation or a more flexible type work location. As with a remote workforce, that's more permanent, and be working from a more permanent location. So with that, we're going to continue on. And one of the reasons, and how did we actually get here, and why are we talking about this today, and why it's such a big deal, is because the pandemic really disrupted the workforce and pushed people, with the closing of business offices and such, out to different locations. So now people are working from many different areas, and this has created an onslaught of state and local tax issues, especially in the payroll area, and as you'll see also in the state income tax and sales tax and other tax areas. Another issue that comes to me is employees really don't know where their people are working. You may think they live in a specific state and they're at home working in that state, but they may have decided to go to a relative's home in another state to work, or they may be working from their vacation home in another state. And it's really important that we track that and that you understand the rules in regards to that kind of remote or telecommuting or teleworking environment in regards to many things. So with that, does your company have employees that telecommute or remote work in other states? That'll be our first polling question.
All right, so while we're launching this polling question, I just want to remind everyone that if you are going to request the CPE credit, you'll need to answer all 3 of the polling questions and the survey that you'll receive at the end of today's webinar. And I appreciate you all coming in quickly here. We're at almost 96 or 90%. So we'll just give this a few more seconds. We want to give everyone an opportunity to get their answer in. And it looks like we've slowed down. So I'm going to go ahead and close this poll. And there we go. So we had 84% that said yes, Karen, and 16% that said no.
Yeah, that's a big number, and we figured that's where it would be due to the pandemic, and having a lot of folks working from other locations than their main office location. So a good timely topic for everyone. So we're going to jump right in regards to payroll issues. And two things that you can really take away from this with the payroll issues is that understand that generally the primary taxing authority for your employee is the state in which your employee resides. Okay, that's generally the taxing authority, is the state in which your employee resides. Withholding, on the other hand, is based on where they are working. And this is where all the problems come into play. So I have to withhold now? Do I not need to withhold? You know, what are those thresholds? So right now we do have the states are using 3 different methods on how they approach this withholding matter. And of course, it would be nice if all the states were on the same page, but of course they never are. So we narrowed it down to about 3 different methodologies. So some states, they can tax you where you live and where you work. So that's the most common one, and that's where we see the most. And I mean taxing by, you could be working in one state and your compensation, and you live there as such, you get your wages, you get your withholding, you go to another state temporarily, or even basically temporarily, and then you may be subject to withholding in that state and taxability in that state as well. And that's the most common one we see. Now, on another front, which I find this to be the most scary of them all, and thankfully there's only a handful of states that do this, and this is where a state can tax your income if you neither live nor work in that state. And these are the states that are currently doing that. And they've done this for a long time. And it's considered the convenience of the employer rules. And basically what they want to do is any compensation that you make is sourced to the employer location or where the employee is based. This unnecessarily creates double taxation for the employee. And also, you may or may not get a credit for those taxes that you pay to a different state. So this is the scariest one of them all, and you definitely need to be aware of this one. So, if you are working in those states, or you do have a headquarters in that state, and you don't either live or work in that state, you may still be subject, or you will be subject to that state's taxing authorities. And the last one is that the state can tax you where you live and not where you work. And those are deemed to be the reciprocal states or reciprocal agreements that certain states have with other states. For instance, you may work in the state of DC, but you live in Maryland. Well, what DC has said is that, look, no withholding is going to be required in our state if you're a resident of Maryland. We're just going to tax you where you live, your resident state. Nothing comes out of our work state. You're good just with Maryland. And that's very convenient for a lot of folks and much easier to deal with on the withholding side of things. So the next thing I wanted to show you was this withholding thresholds, which really complicate things. As you can see, there's only 3 very friendly states, and that means you can be in those states for at least 30 days before you're subject to withholding or taxation in that state. As you can see, the very unfriendly, which is the majority of those states that are highlighted in that purple color, are the ones that probably have 1 day threshold. So that means if you step into that state for 1 day, you are subject to their withholding requirements in that state. So be very aware of where your employees are, where they may be working, and the rules on a state-by-state basis. Now, the government, the federal government that is, has been trying to simplify these rules across state lines. But as with anything in the state world, state and local tax world, the states like to do their own thing. And as you can see, I listed here a number of different bills that have been introduced into Congress. The latest as of January of 2021, but you can see nothing has moved after being introduced into the House. These are not, they haven't gone anywhere. I don't know if they will go anywhere. And even if they do, not certain if the states are going to be obligated to follow suit. So that is continually going to be a challenge for most business owners that do have employees crossing state lines and working in different states. So the last slide I wanted to present to you before moving on to our next section is the reciprocal states. And as you can see, there's the work state. And please note that these don't go back and forth. So like if my work state is Arizona, Arizona is saying, well, if you work in my state of Arizona, you do not have to withhold Arizona taxes if you're a resident of California, Indiana, Oregon, and Virginia. How they came up with those states, I really don't know. But there are specific withholding forms that need to be completed. So make sure that these do not work the other direction. As you can see, California is not listed as a work state. California is not going to give reciprocity to anyone. So they don't go back and forth, and they're not interchangeable. So what you really want to do is check out that work state where my employee is working. Do I have a withholding requirement if my employee lives in any of these states? You may or you may not. So keep that in mind when you're going through this process as well. So therefore, I'm going to turn this over to Kim Tarnico, and she's going to move on in other payroll considerations.
Thanks, Karen. A lot of times when we do think of having telecommuting or remote workers, what we think about is the income tax side of it from the employee's side, the withholding and things like that. But there are a lot of other areas that you need to remember can come into play. For example, does having an employee in a state require you to register with that Secretary of State? Well, it very well could. In many states, you're required to register with the Secretary of State before starting any business. And why would they want to do that? Well, first of all, they want to know you're there. They want to be able to tax you on your business income. But other items that you need to think about that would be protecting the company. You know, if you can register as a limited liability entity, then there's protection there. It can protect the name of your business, so nobody else can use your business name within the state. And even more importantly to me is if you're not registered with the state and they don't think you're there legally, then you're not afforded the protection of the court system. So if something would happen and you end up needing to use the court system, then they may tell you you can't do that until you are legally there and registered to do business. So it's always better to look at these things up front and make sure you handle them on the front end before it becomes a problem or you need them. So if you don't do it, what can happen? Again, we mentioned the legal problem. You may not be able to use the court system, or you can get hit with the penalties. And we'll see that over and over again. The penalties are always an issue. It's to encourage you to do the right thing. So once you have an employee in a state, be sure to check the Secretary of State's website to see if you're required to register there to do business. Karen, can we get you to advance? Thank you. So one of the other areas you need to look at are the labor and employment laws. Again, which you've heard Karen say over and over, every state is different. You need to know where your employees are working, where they're physically located, and if they're moving around. You know, you may know your employment laws inside and out for the state in which you are headquartered or where you do a lot of business, and that's great. But know that if you have an employee in a different state, those laws can be different. What are the non-compete agreements? What are the sick leave agreements, the Family Leave Act, if there's special state considerations there? You need to know where your employees are and know the rules of those particular states. One of the other things that we look at has to do with workers' comp insurance. And you may think, oh, well, they're covered under our main state, whichever we're located in, and that's good. And that's the general rule. Wherever your employee is working, that is where you need to have the workers' comp insurance. And typically it's through the state, or the state will have some approved providers. Well, again, if you don't comply with that, you may have employer liability exposure, and again, the penalties. And I have seen this happen. I had a client one time who had an employee located in New York. it was a temporary situation. The employee only was there for a few months, and then they decided it wasn't working out right, so the employee moved on. Well, the state figured out, I think through the state withholding, that they didn't have the unemployment or the workers' comp insurance, and they got hit with a pretty hefty penalty. So again, be aware, that's the general rule. And again, it's sort of the same thing with the unemployment insurance. If you're in a state, you have an employee in the state, you need to go ahead and make sure that you've got your employee registered and are paying that unemployment insurance for that state, whatever their program is, because all the states are different. And again, not doing that can expose you to a liability, and there can also be penalties for non-compliance. So, the main thing to remember is, as Karen has said, know where your employees are. Know the rules of the states in which they are working. Val?
All right, let's go ahead and launch our second polling question. In how many states does your company have employees that are telecommuting and or remotely working? And just as a reminder, if you are going to request the CPE credit, please do answer all 3 polling questions and take that survey that you'll get at the end of today's webinar. And we appreciate you coming in quickly again. We're up in our 80%. We're going to give this, just a few more seconds. We do want you all to have an opportunity to cast your vote. All right, I think we've slowed down. I'm going to go ahead and close this poll. And Karen, I'll let you review those results. Do you see them?
No, they have not popped up on my screen.
I'll share them. So we have 17% that said 0 to 1. 41%, the largest amount of our poll, came in at 2 to 5. 40% of our attendees have more than 5. And then 2% just really weren't sure. So it looks like that 41 and 40% between 2 to 5 and more than 5 is our heaviest hitters.
Wow, well, thank you so much, Val, for that. I greatly appreciate you running that poll. And it does, again, indicate the workforce on the move. One quick thing, my son had provided me his information to prepare his tax return this year. And because of the pandemic, he was all over the United States. He's a youngster, so of course he's hanging with his friends and going to different places. And I got his W-2, and I was pretty impressed that his employer was able to capture all the states for which he worked, because he did have to charge his time to the appropriate location and codes. But I told him that I wasn't planning on preparing 2 non-resident state returns and a resident state return for him this year. And thankfully, one of those states had no income tax. Otherwise, I probably would have had to done 4. So it does make it very challenging for the employer as well as the employee on getting this right. And again, as we mentioned, is definitely one of the key items is knowing where your people are and then following the rules for that specific state and the requirements for compliance. So that's going to bring us into some other issues, not just payroll, but having these employees in all these other states can create other issues and wreak other havoc for a business owner. And the first and foremost is state income tax issues. So right up front and right out there, does an employee working from home or telecommuting create a business connection with another state? And a business connection is, does it give that state authority to tax the business owner by that employee being there? And the answer is yes. Unfortunately, yes, it does. And that creates a physical presence or a physical connection in that state because your employee is tied to the business. And here's a map that shows that an employee that goes into, and note that the purple states, which is the vast majority on the US here, states that you only have to be in that state 1 day and you've created income tax nexus, okay? That means your company is now subject to income tax in that state. So this is something that you really need to consider as well when you're looking at your telecommuting employees, your mobile workforce, remote workers, of what that is going to do to the business and what that looks like across the board on the state front. And that does need to be considered. So what does that create? Well, it's going to create a bunch of new state tax reporting and filing and payment requirements. And as you've seen in the news, or maybe lately, or you've been subject to these, but there's a variety of different taxes out there, and states are always looking for new ways to tax revenue dollars. And, you know, there's franchise taxes, sales taxes, personal property taxes. You know, we talked about payroll taxes, you know, gross receipts taxes. So it's not just your income tax area or your predominant sales tax, which has always been the topics of discussion. But having that employee can subject you to a variety of other taxes as well. And it's not just on the state level. You could be subject to a lot of things at the local jurisdictional levels as well for city and county purposes. So keep that in mind with this mobile workforce that's out there. So one of the other things is, and being in a services industry, one of the more complicated areas is and a lot of you may have already dealt with this, is the sourcing of your sales revenue for services. And states do use different methods, you know, and states do have their own specific methods on how you need to source revenue to their states. And I've indicated here, and the biggest impact, it's not so much on the market-based sourcing states that cause or will have potentially an impact, but it's those states that are on the cost of performance method that can create problems. Because once you have, if your employee was working in a market-based sourcing state and they move, or they are telecommuting or going to work remote in a cost of performance state, that's going to shift your sales sourcing to that state. So that's something to be aware of and consider also when you're pulling your information together or looking how your systems are set up based on where your employees are working, especially if you offer that telecommuting remote workforce options. So again, lastly is the sales tax nexus issue. Again, if you do have an employee or someone telecommuting or a remote employee working from another state, that does create a connection with that state and subjects business to a sales tax requirement if you have services that are subject to sales tax or products that are subject to sales tax. And please note, again, the general common, you know, thought is that services are not subject to tax or sales tax. And in some states, yes, that's true. In other states, some states tax services, some states do not. And others have more sales taxation on services than others. So it's not a one for all. Just note that whenever you're in these states, you need to be familiar with those state rules based on what you're doing. So Kim, I'm going to turn it over to you.
Thanks, Karen. So now we're going to talk about a little bit of COVID relief. And, you know, most of when this whole pandemic started and we all thought, oh, well, we're going to have to shelter in place for a little while. I remember last year, my birthday is about this time of the year. My daughter came home for the weekend to see me for my birthday, which I was very thankful for. And she ended up staying for 5 months just because she was sheltering in place with us, which I'm very thankful for that time with her. But now there's issues, like Karen said, what do we do with this payroll? And what happens if we have a telecommuting or a temporary worker as opposed to a permanent remote worker? So the rules can be different. So with COVID, there has been some relief that we've seen come through. And when the shelter in place orders first came down, the AICPA had some recommendations, and their recommendations were for the employer, continue to withhold from your employees' wages for the states you always have, where they were working, where your headquarters is, or where the office they're working in. And for the employee who may be living in a different state than where they normally work, go ahead, and we still recommend, we're going to withhold from the state in which you normally had your withholding done. So we've seen about 14 states come down with some specific guidance, and many of them have not given guidance, which is, always makes it a bit of a challenge for employers, for tax preparers, for all of us. But that is one thing you need to be aware of. Pay attention to what the payroll withholding requirements are at this point. The next thing has to do with workers' comp and the unemployment insurance, which we already discussed the general rule, which is you have to get those items where the employee is working. Well, the states have issued some guidance for temporary employees moving in different places or working from different places due to COVID. And some of them were saying, you know what, you still do it in the same state that you always have. Where the company is located, where you've always withheld. Just leave it that way. Don't worry about them working temporarily in other states. And then other states have said, no, if you have an employee in our state, you need to comply with our workers' comp and unemployment insurance rules. So just, again, if you have employees working in different states, be aware of the rules, check them, and make sure that you're following them. The next thing has to do with income tax nexus, or that connectivity with the state that allows the state to tax you at the business level. So several states have come out and said having a temporary employee in the state will not create income tax nexus, and you can see all those listed on the screen. Other states have issued some guidance, incomplete or temporary guidance. And then other states, again, have issued no guidance. And with a lot of these that have issued temporary guidance, be aware that some of it is tied to a specific date. Like it'll say it'll go through June 30th, 2021. It'll go through 12/31/2021. Or some it's tied to the date that the shelter in place order is lifted in your state. So just be aware of what the rules are and when they're in effect and when they will change if they're temporary. So for sales tax nexus, which again can be very different than income tax nexus, we're basically seeing 4 responses from the states. The first one is, you know what, having a temporary employee in the state is not going to create sales tax nexus. Other states are saying, we're going to provide relief or we won't create sales tax nexus on a case-by-case basis. So the state will have to look at what you have going on in the state and the extent of the activity. Other states have said, no change to our sales tax nexus policy. If you have a person in the state, you need to be charging and collecting and remitting the sales tax. And then other states have done the, hey, no specific guidance is being issued. So again, where you have employees, look at the rules. And again, sales tax nexus rules will vary from income tax nexus rules. So just be aware of that. So now we're going to talk about a few other considerations now that we're moving on. So what is our world going to look like in a post-COVID situation? Where are we all going to be? Well, I think we all can agree that it's going to look very different than it did in a pre-COVID situation. You need to sit back and catch your breath for a minute and really think through where you want to go from here. As businesses are starting to open again, what is your policy going to be for your company? As the businesses open and the states open up again, are you going to require everyone to immediately come back to the office, or are you going to allow people to still choose to remote work remotely or telecommute? I can almost say that after the work is reopened. Maybe you're going to make everybody come back unless somebody has a health issue or has some kind of family situation because of COVID still that they need to work remotely. Or even after everything is fully open, are you still going to give all your employees the option of working remotely indefinitely? I think we're all seeing that while we thought we all needed to work together, and in some cases it does make a big difference, we've all adapted and learned that we can work remotely. So you need to decide what the policies are going to be for your firm. Karen?
Yes, I'm going to jump right in here, Kim. Thanks for that lead in. And the thing is, one of the big things is you definitely have to look at that big picture. You know, what's your cost versus the benefit on having this telecommuting remote workforce, and consider everything together. One, all the different types of tax implications, you know, the labor laws and rules, the cost of compliance, and then how is the company going to manage the location of their workforce, not only just the employees, but property and equipment and other things. And you know, also one of the big features, and SN does this very well, is that they can grab talent across the country. And I think that's been extremely beneficial to our firm, is getting a lot of great people that we can pull together and work as a team. You know, for that huge benefit of the types of talent that is out there.
Hey, Karen,
yeah.
excuse me. Sorry to interrupt, but we've lost our presentation.
It's not showing on my screen.
No, it says waiting to view Karen Poy's screen.
Do you see it now?
Oh, yes, we do. Thank you.
Okay, wonderful. Well, I apologize for that. I guess I got temporarily knocked off air. But anyway, based on what I was saying, this is a list of different things that you definitely need to consider if you plan to keep a telecommuting or a remote workforce after COVID, you know, is no longer around, hopefully. And I think the most important thing is that if you do adopt some type of a policy that it is definitely adhered to, and that you have your systems and things in place. And Val's going to be talking about that later in the presentation. Kim.
Thank you. So some of the things that we recommend, just if you're going to get yourself a written policy in place, and you need to do that, that's very critical. And to do it now when you have time to really think through it, to consult with an attorney, to consult with HR, do that now. But outline what employees are eligible to maybe participate in a remote work situation. For example, if you're in a service industry, what we have been finding out in public accounting is that, you know, it's a little hard sometimes when we're used to the hands-on training of new staff to do it remotely. And that's okay. It's just a matter of, can we adapt and learn how to do that? And we are. So also set the expectations of the employee availability and responsiveness. You know, hey, you can work remotely, but it's not working from midnight to 8 a.m. when all our clients or our people who need us are from 8 to 5. So set the expectation. Have some measure of productivity. If you're not being productive, you know, working remotely isn't for everybody. If you can't be productive, then maybe you can try it, but if you're not producing, then you're gonna have to come back to the office. Make sure you identify or deal with workspace safety. You don't wanna have any type of claim, an injured employee claim, just because you haven't set the expectation that their environment is safe and healthy. Also, be aware that company security is an issue. Are people dealing with everything online? Is everything secure there? Or are they coming into the office to get physical data that maybe is at risk for being exposed or people seeing it? So make sure you address all of those items in your policy. Karen?
Yes, and just to wrap everything up before we jump in with Val, you know, what are the risks of doing nothing? It's always nice to bury our head in the sand when something seems to be so overwhelming.
We lost you again, Karen.
I don't know why I keep getting lost.
There you go.
I went ahead and took it, Karen.
Yeah, I'm not certain why I continue to get lost here, but I appreciate that. So the risks of taking no action, you know, there's a lot of risks involved. You know, your financial risk, you know, the states can come in and they're going to go back. And it's not just through the pandemic years. You know, we're seeing states now go back to 2015. Actually, we have one client that going back to 2014, and these are on payroll issues. They received a notification from a state that said the state said that the IRS showed that they had payroll and that they may have employees working in their state. And that was basically a fishing expedition, but they were correct. And we had to comply. And that does create liabilities. It does create penalties. It does create interest. And it does create a cost to the company to get those back years filed, submitted, and the taxes paid, but then also going forward. So it's not just payroll, it's income tax, it's sales tax, it can be gross receipts tax, any of the taxes that a varying state may have. They're going to capture you on all of them. They're not just going to hit one, they're going to capture you on every single one. So it's really important that if you do not take any action, that this financial risk and burden can be out there for you. Obviously, your reputation, you want to make sure that your reputation with clients or customers or contracting in the state is above par to be awarded contracts or any other type of work within those varying states. Regulatory risks in regards to licensing and things like that. And then also, if you ever decide to sell your company, most due diligence these days are on the state and local tax side. They used to be very, very strongholds on the federal side of things, but now they're looking that there's, a lot of non-compliance on the state side of things. And the last thing a buyer wants to do is inherit a company's tax liabilities that go back for a number of years. So it's very important to try to keep your house clean as possible and try to head these items off at the forefront and try to stay in compliance. And also, the only thing that we can do is to warn you that do not register if you feel that you haven't been in compliance. Register after you have a game plan, because if all of a sudden you think, oh, I got to register in the state of Georgia, don't just go register in Georgia, because what Georgia's going to come back and say, well, when did you get here? And that's the key question. Well, if you got here back in 2013, 2014, guess what? They're going to go all the way back then. So the thing is we do have remedies that can limit your look back period to maybe 3 years or 4 years, but not 7. So if you realize that you have an issue, talk with someone to see what can we do, how can we handle this most effectively before we get discovered by the state, and push this forward and play it forward and try to minimize any other type of risk or penalties or liabilities that you may end up with. So with that, I am going to pass this off to our next polling question. And Val, if you want to handle that, and yep. Thank you.
I'll go ahead and launch that next polling question. Does your company have a telecommuting and/or remote workplace policy in place? And as a reminder, and I know I sound like a broken record, but I just don't want anyone to be disappointed. So if you would like to get the CPE credit for this hour, we are going to need you to answer all 3 polling questions and complete the survey that will pop up right at the end of this webinar. So you all are coming in pretty quickly again. I do want to give this just a few seconds and give everyone an opportunity to answer this poll. And it looks like we're slowing down here, so I'm just going to give this 2 or 3 more seconds and then we'll call this closed. Doesn't look like we've had any activity. So Karen, our responses were 56% of our attendees do not have a policy in place. So I'm not sure if you'd like to make a comment on that before I launch into talking about reporting.
Yeah, and I would, and I think this is a great turnover point to you too, Val, is that if you don't have a policy in place, I think it would be most beneficial that you start having that discussion in regards to these state issues that can arise from not having one in place and not knowing potentially where your employees are and complying with those state rules that are out there. So Val, you can help on this one.
All right, I hope so. I'll definitely give it a try. So just to confirm, everyone can see my screen, right?
Yes.
Yes, ma'am.
Thank you very much. All right, so where can we capture the information in our ERP or accounting software? And ERP stands for Enterprise Resource Planning Software, very commonplace today, you know, in the market. Common brand that I think a lot of you will recognize, Deltek. Deltek is one of the largest providers of software like that. And they make Deltek's Agera software and Vision software and Vantage Point software. All three of those packages are designed specifically for the A&E industry. There's other packages out there as well that you might be using, and QuickBooks is still a player in this game, right? So I've prepared some examples for you today that are based on the Agera software. That's the software that I consult on, so it was easy for me to prepare information. But you know, you could translate what I'm going to share with you to really whatever package it is that you are using. So we need to track the actual location of the project, and that would be the state, and then there's also city and local, you know, tax compliance that we'd want to consider. So your software may have a standard field for that, or most softwares today will give you the ability to create custom fields. And with the examples that I'm going to be showing you in a few minutes, we have used custom fields. You know, just kind of a user tip here, when we're talking about custom fields, what I find is try to get the most control over the data entry that you can. So for an example, in the Agera platform, we have 6 different types of custom fields we could create. So to track a state or a city, I could create just a text field where people can type in. With state, what I recommend is a 50 state drop-down list. You want to have control because typos can really skew our data, right? So get the most control you can. So when adding a state, we'll do that drop-down. Can't do a drop-down for city. There's a bazillion cities, right? But you really want to like think through your approach here and make sure as you're starting out on this journey that you've thought through all of the fields that you need and how you're going to populate this data. And we would want to track this at the project or the phase level. Sometimes people ask me, what about the client? You know, potentially, I'm guessing you could do work for one client in multiple states or multiple cities, locations that you need to report on. So it would be really critical that you're tracking this information at the project or phase level. If you had a project where in your work breakdown structure, you may call that a phase, you may call that a task. If those different phases or tasks are in different locations, then we would have to track at that level. So that's what I mean about, your planning of this is important to really kind of think through all these different situations you might encounter and how best to capture the data. And then how do we know which of the labor on that project is being provided from our home office and which is on site? That can be a really important designation. So again, going back to the Agera software platform, I would use a labor activity. That would be the easiest way. I know that Deltek's Vision product also has that. In QuickBooks, we might be thinking of an item, and we might want to create a phase of the project, right? So we would have a phase breakdown structure where we had one phase for on-site work. Whether we use a labor activity or we use a phase, we need to designate how we're going to capture the time entry for that on-site work. Really critical. And again, you might also have a standard or custom field that's available in your timesheet. The Agera software really doesn't have that, so we would go to probably a labor activity that people could select, for that entry. But your program you might have the ability to customize your timesheet entry. And so you want to pick kind of the most standard approach that your software offers you. The less we're fighting against the natural workflows, the better. So again, planning is going to be really, really important in this. And then I think this is a piece that sometimes gets overlooked. You know, it's typically the accounting team, the software champions that are really, you know, having to be accountable for this. You're going to be the ones that are pulling together this data and reporting this data and, you know, compiling maybe with your CPA that tax information. So we've got our head in it, you know, and we're really thinking about it. But what's really important is that we train our team. So if we set up a new labor activity that we need people to use when they're on site, we need to train the team. So whether it be a phase of a project, whether it be a labor activity, whether your timesheet has a custom field, make sure that we're not expecting people to just know this. We want to have a training session or a recording, you know. So if you have a team, like we use Teams a lot, and it's super easy to record those sessions and it's automatically published in the chat. So think about doing that, but you want to make sure you're training them. I like to follow up with trainings with a simple one-page PDF, maybe a couple screenshots, some arrows, bullet points, ABC. You know, I do an awful lot of training and helping clients train their team on new features of software. And I just find the more that we plan in advance and the better we equip our team with the tools they need to adopt new processes and new tools, the better chance for adoption and successful reporting we're going to have. Don't forget to train the people that are reviewing, right? So what if I'm the project manager? I need to be trained on how to review the time worked on my project because I know if I sent someone on site. So having me review that time is probably going to be more effective than just relying on some kind of human resource or accounting review. So incorporate the people in the team that are in the know and that can really help you ensure that your data is accurate, you know, when we're pulling it for this reporting. You know, make sure that you've got a review process in place, and we could create reports, or if we're using Azure widgets or some other programs have widgets too. So create some kind of tool that is simple to use, that gives people the ability to review the time entries and make sure that, you know, these activities are used or the phase is used. Make sure that if we're tracking location on projects or phases, that that data is filled in on every project. And then, as with the other processes, we want to make sure we train our team on the use of the review, right? On the tools that are there, the cadence of the review. If they find an error, what do we want them to do with that? So again, we just don't want to assume. We want to make sure we're keeping the conversation going and really educating our team. And I thought it would be nice to show you some examples of what we could come up with. And you know, I've learned a lot by listening in this hour, and I've been paying attention to this topic for a while. And in the last year, and I really have noticed since COVID and the pandemic, and since the clients that I work with, you know, have had their workforces go almost 100% remote, our team has gotten a lot more requests for help with reporting like this. So these screenshots that I have up right now are from, again, the Azure software. And this is an example of how we could report on labor, cost, wages for work that is done on site in other states. So this would also capture work on site in our home state, because our assumption is we're tagging every project with a location at the state level and the local level. But in these particular widgets, we filtered to that activity, right? So we set up an activity for employees to use when they were on site in a different state, and we filtered this. And that's the way that we can capture just those particular wages that we really want to take a look at. So we filtered to that time entry labor activity, and then we were able to group and sort both by state and city. And what you see here in our examples with the call out and the red arrow is that by default, these are very compressed, very summarized views. But when you need to see more detail, you can click to open them up and expand your view to see more details. And along these same lines, we have receipts for sales. So for cash receipts taken in, Our first slides were for labor reporting, for payroll wage tax reporting. This would be for, sales tax liability and reporting. And very similar in concept, we're tracking by location, by state, using the same exact fields, right? So we're using the same location fields for both payroll and for sales. And, you'll be receiving this slide deck. I feel like it's always good to make sure that your report shows you where you have missing data. And if you look at the top example, it's showing us clearly which projects are missing a state location. So you would be able to expand that group then and go in and clean up your data. So hopefully this has given you some ideas. If you work with a consultant or an expert from your software, I just really recommend you kind of sit down and really think through this process and be able to ensure that you get the tools set up correctly. All right, Karen, I'll pass it back over to you.
Yes, thank you very much, Val. Appreciate all that great information. And what I would like to do now is we have definitely another guest speaker with us today that has a lot of great insight in the A&E AEC world. And I'd like to introduce her, and her name is Mindy Toole. And Mindy, if you're on there, would love to have you join us and provide some insight.
I am. Thank you. So, ladies, y'all did a great job, right? We're all scared to death of what we're, not doing right, and we don't want to be in trouble with the federal government. But I've got one for you that's even more, right, scary than the IRS might be your state licensing board. And this is where it's just absolutely critical that the game plan that the ladies were referring to really does need to start with your state licensing board, right? What if you have one employee in a state and that employee holds a license in that state to stamp drawings? All of a sudden, does your whole firm have to be licensed in that state? And then what if that one employee is actually one of your owners? And of course, then a different set of rules. Something else that, I'm brought in to, scare you with right here at the end, in why you would want, your attorney, your CPA, your consultant helping you do this before you go and register with a state, is we also know that for A&E firms, each state does not recognize your legal structure, right? So let's use, Mississippi Board of Architecture, for example. For an architecture firm, they don't recognize an LLC as an entity that can hold a license in the state of Mississippi. So then what do? Right? So there are ways around that. There are things that we can do. Some of it includes setting up a whole new company, right? So the licensing requirements just add a layer of complexity to this, where of course you need to register with the Secretary of State, or of course with the Department of Revenue. Your professional liability carrier needs to know if you have employees in a state that not necessarily, are they going to be temporary anymore? As Karen was talking about in the where do we go from here? If you are, as a firm, making the decisions to offer this remote or teleworking or whatever you're doing to accommodate your employees, the cost of compliance, especially if your whole firm has to be licensed in that state, and then consequently has to file an income tax return in that state. So I want you to think about let's say an S Corp with 75 shareholders. So what is the cost of compliance for those 75 shareholders to add that state K-1 to their income tax reporting if the state doesn't offer a composite return? And all of that is done because you've got one employee sitting in a state. And maybe it's worth it, maybe it's not, but it's just an area for management to make a decision on what is best for the life of the firm. And that's actually, that's what I got. Enough to scare you.
Thank you so much, Mindy. Greatly appreciate your insight there. And I just want to thank everyone for joining us today. If you do have any questions, please go out there and post those questions or reach out to us if we can assist you in any manner. We'd be more than happy to help any of you or guide you in the right direction on any questions you may have. So we appreciate your attendance today, and thank you very much, and have a great rest of your afternoon.
Thanks, Karen.